So a lot of the challenge on this particular channel is to identify what it is in regard to the information that's going to benefit you guys. And this kind of came up as an idea when a lot of you guys know I'm very, very engaged in the commentary with my particular audience. I love it. I love to hear your guys' feedback. I've learned a lot, which is really part of the enjoyment that I get on this particular channel, is being able to talk with people, not only from the US, but abroad as well. I mean, I'm speaking with people all over the world, and I love the opportunity. But one particular commonality in talking to people is everybody kind of wants to talk in definitives. And what I mean by that is they either want to buy one stock or another stock, or they want to open one particular account or another open an account, or if they have this account open over here, that they want to make sure that they shouldn't start this account over here. And a lot of YouTube channels out there also speak in the same definitive language. And I think in the financial context, I think you can kind of have your cake and eat it too. I really do. I think that the way I approach finances is there are certain pieces that finances that I don't understand. I'm not an analyst. I don't want to understand. I don't care. I don't do this for my day job. But I am a successful investor, okay? And there's certain key premises that go into becoming a successful investor, okay? And I teach you guys all that stuff. I'm an open playbook. I just show you how I deploy it, and there's a few things that you can take that I particularly do in my strategy that can help you. Awesome, I'm all for it. But when you speak in definitives, all right, you're speaking as if you have one right answer and one wrong answer, all right? And that might not be the best medicine when approaching the financial landscape as a whole. Guys, this is going to be my video on definitives. This is the Independent Investor Channel. My name is Ryan. We're coming to you from New York City, New York, the Big Apple. It's awesome to be with you guys. It's a pleasure for me to do this particular channel. This is going to be addressing definitives when I'm talking about retirement accounts, investment options, and how I go about approaching my financial life. And it's definitely unique in nature, okay? But I don't carry an 825 credit score for no reason, okay? There's certain strategic things that I do that I will get into in future videos. By the time this channel evolves over a couple years, you guys are gonna kind of know exactly how I approach my day-to-day spending life, how I approach my financial investment life, how I do the funding of my accounts, all that stuff. I have no problem with being completely visible with you guys, but to get to that point, we have to kind of build up and have an understanding about why we talk about certain things, all right? And so many times people are like, should I do this or should I do that? And my response is to do both. Should I open this account or this account? Do both. Should I do this at the expense of this? Do this. Do both, right? And I think a lot of people kind of sit back and they're like, wow, you know, he's not telling me what to do, you know, he's giving me the option, you know. And that's not necessarily true. What I'm really saying is that there's probably benefits to doing both. It's just you're not acknowledging where you've been, the successes that you've been in the particular account that you're in, and maybe not understanding that there may be benefits over here that you're not realizing over here, all right? Now, I get this question all the time when we're comparing Robinhood to a retirement account, okay? And everybody's like, should I take Robinhood and switch it over? Should I even start a Robinhood? Which account should I start first? I contend that you should start a retirement account first, and I'm right. Okay, you can argue with me all you want, but I am right, okay? There are absolute deficiencies to starting a Robinhood account at the expense of a retirement account. I think starting a Robinhood account in the short term is very short-sighted, okay? You're looking to save $7 on the entry and exit fee, okay? Tell me I'm wrong. All right, but that's your motivation when you're starting opening that account at the expense of a retirement account that's going to allow you the tax protection. Now, I'm long-term thinker, okay, and I'm long-term thinking for you guys as well, in that those accounts are going to build up over time, and those frivolous entry and exit fees eventually will go away in your retirement account down the line, and you guys are going to have the ability to enter into and exit positions for free anyway. Right? So you might as well have the tax protection to boot and the ability to take a short-term trading position in your retirement account. Let's say you buy Amazon, and let's say 3 months later, Amazon runs up 50%. All right. In the retirement account, you can take that 50% of profit out short term and not be hit with the capital gains tax. But in the Robinhood account, you're still going to be stuck with that short-term tax and having to hold on to that asset for long-term capital gains implications for over a year. Okay? Long-term. All right? Now, my response in regard to talking about definitives is do both. If you've already started a Robinhood account, my advice isn't to shut the thing down and take and do the proceeds over here, okay? Robinhood is just a brokerage account, that's all. Now, I don't know about the functionality of taking funds or disbursements from the Robinhood and funding a retirement account. If that's possible, wonderful. I have a brokerage account already with Merrill Edge over here and my 2 investment retirement accounts over here. So it's really easy to work off of the same platform. But if you guys want to work off of separate platforms, by all means, keep them both, but definitely start that retirement account over here, right? The theme, do both, all right? I get this one all the time as well. I have a 401k. Should I start a retirement account? The answer is yes, you do. You start both of them. Should I liquidate my 401k to fund my retirement? No, you should not. The 401k is going to give you some really beautiful benefits. It's going to grow slowly over time. I'm not ecstatic about the growth rates in 401ks. What I am excited about is most of these programs allow a company match, okay? And if you're in this camp, listen up. This particular piece is a benefit to you guys. It's free money, all right? It is free money. And if they're matching you contributions, let's say dollar for dollar up to a certain percent, my advice to you is very simple. Make sure that you're getting that maximum amount of value out of that particular matching in the 401k. But that does not prohibit you from going out and starting a retirement account, all right? This option over here is free, all right? You're only allowed one. So you've had your 401k for years, it's been building, or your 403b over here and it's been building up over time. You have that nice diversified baseline that I talk about all the time. How about starting a retirement account over here and putting some really nice, good quality blue chip stocks in there, maybe some dividend pairs to where if you listen to me as a direct investor, those dividends are going to be paid directly to you. We can roll those in and accumulate shares going forward. So you're going to have 2 machines working, not just one, right? So definitives, either one or the other? No, we do both. All right? The last thing is stock versus stock. I get this all the time, and I have fun with it. I really do. I like the topic. I love talking about stocks and, you know, which stock to buy. I do my monthly videos because it's a fun thing. It gives you some insight on what I'm actually looking at and actually buying within my account. There's no fabricated anything. This is just actually what I'm doing, and I do it to provide you guys visibility on what I'm doing. It's just my program. I don't expect you to carbon copy what I'm doing and going in and doing the same thing I'm doing. I don't expect that. But when you're asking me, should I buy Apple or Google, okay, my response, if it's right in your particular account, is to do both, okay? Maybe you have a spouse and a spouse, and maybe one is less tolerant and the other one is more tolerant, all right? The more tolerant can have that Google in the account and the other one can have the Apple in the account, all right? So a lot of the time, my thing, when you guys come to me and you say, hey, what about this stock? A lot of my response, I think a lot of you guys are expecting me to say, no, that's not a good stock, don't do it. A lot of the times you guys are doing your homework and you're hitting it right on the head. But I'm not going to sit here and talk in definitives and say, you know, either Home Depot or Lowe's. I may say do both, okay? There may be some amplifying questions to help me determine what stock might be the best in that particular portfolio, but that's where you need to provide me those specifics. But don't come to me in definitives and say, hey, I'm looking at this stock, this is my only option. I find that all the time, and there may be other options that maybe you want to look at also in addition to your primary option. Guys, thank you so much for tuning in to the Independent Investor channel. If this is your first time tuning in, hit the subscribe button. button. You'll be notified of any future videos. If you have any follow-on comments to the definitives conversation, leave those comments in the bottom section, and I'll respond to you indefinitely. I love to respond to my audience. I love that open dialogue that we have with my particular viewers, guys. Thank you so much for tuning in, and good luck in your investment future.